Are the markets continuing to melt down, or is this just a correction of the recent bear market rally? Are we in a bull market? Let's jump in and take a look at what's going on. It's been a big past week of news. We had the uprising in Russia with the Wagner Group, Prigozhin, marching, taking basically a mutiny and marching into Russia on Moscow, but then out of nowhere decided to pull back. And Putin came out today and said that they would have crushed the rebellion, and they're going to bring the leaders of the mutiny organizers to justice. So breaking events there in Russia between Prigozhin and Putin. So we will see how that all shakes out. The one thing is certain is that all of this has potential for escalation and unrest. There's worry about the Zaporizhia nuclear plant, coming under, destruction by Russia. So we'll have to see how all that plays out. And other than that, markets, Dow finished kind of flat today, S&P down 0.5%, NASDAQ down 1%. And the funny thing about the NASDAQ is the same stocks that led the NASDAQ up and led the rally are the ones that were basically down here the last few days. So we'll jump in and take a look at the charts. But the big news is the geopolitical risk out there. If this would have escalated, if there was some sort of a civil war in Russia, the markets would not have liked that, and oil most likely would not have liked that. So with the nuclear power plant at risk and other things, you got to keep an eye on geopolitical events because they will affect markets. You can't really position for that or trade for that. You just have to be aware of it. And if something happens, take chips off the table, sit on the sidelines and wait to get back in is the best you can do. So this is the Dow. We put these fib retracements on here, and the market reversed right at the 702 on the Dow. It reversed after the October rally on the 702, dropped just a little further than where we are right now, down to about 33.4, rebounded, dropped again. So it has not been able to clear the 702. So is this going to be a double top reversal to go down and retest some of these lows? The big thing to watch here is the money supply and liquidity. And liquidity, this is a liquidity-driven market. We've got the same thing going on with the NASDAQ. Of course, the AI rally has driven the NASDAQ almost to the 786, but again, rejecting on the 702. So the last time that happened was right over here in April. That's when the market dropped on the NASDAQ down to June, had a nice bounce, and then ultimately put that low in October with the rest of the markets. So are we going to see this again, or maybe just a pullback with a rebound to the 618, which is likely the next target if this down trend continues? And, you could see a 10% correction. And what does that look like? Let's take a look from here and see where 10% gets you. If, whoops, that's the wrong indicator there. Hang on one second. Let's go over here and grab this. So if we got a 10% correction, that would bring you down to about the 0.5. So that'd be about a 50% retracement of this last high right here down to the 0.5 level, which is in confluence with the August high. So that is an interesting technical level there. S&P, same thing, rejecting on the 702. Didn't quite make it there back in August. Didn't quite make it there after the October rally. Again, a lot of the AI narrative driving the markets here lately, almost down to the 618. 10% would probably bring this one back down to that 0.5 level as well. 10% from the peak, actually a little further. 10% brings it back down to around the 382 in this area here. So we'll just have to kind of continue to watch, see what happens. The VIX catching a little bit of a bounce, but we're still not a huge volatility event, back up into the 20 or 30 range like we saw the last time we saw the 30 range was in March. This was May in this area here. This was the August, September area on the VIX where the market put in the last lows. Dixie kind of catching a little bit of a bounce here, not really holding up, but last couple of days Dixie was on the move. Is the Dixie going to move lower or bounce from here? We don't know. We'll just have to kind of wait and see. But as the market uncertainty continues, treasuries will likely get a bounce. And again, one of the big things to watch is, that money supply, liquidity, and money supply is definitely dropping. The Treasury has to reload the accounts. That takes cash away from the markets. There is no QE going on. The Fed is not printing money, buying treasuries, buying mortgage-backed securities, things like that, which pushes money into risk assets. So, and then of course we have Fed potential rate hikes coming in July and August. Some people think we're going to get another rate hike. Some people don't think. Economists, analysts, all the academics, they're split on whether or not there will be a rate hike in July coming up. So all the economic data will come out, and the Fed will probably be watching that, inflation, everything else, to see if a rate hike is warranted. Bitcoin kind of reversing right now, reached that peak of 31.4, which takes it back to this area here of June of last year. Didn't quite reach that ultimate high of 32 that it reached in June, and kind of rolling down, it did hit 29.9 here briefly. Of course, that's the major support level right there, is that 29,000 range. If Bitcoin can hold that, it can continue to consolidate, put in a bull flag, and maybe make a move for a higher range, like we talked about in terms of a retracement from this last drop. If we look at these levels from the November low, the 618 would be right at about 35,000. 702, where the markets are projected, would be at 38,000. With all of the news about the ETFs, the market might consolidate here for a while between this $25,000 and $30,000 range, waiting on news of the ETF. If the ETF advances, BlackRock's ETF and Valkyrie and Fidelity, everybody else that's getting in the game, Wisdom Tree, if those ETFs advance to the next levels, again, approval probably won't likely come before the end of the year, official approval, but they can advance through next stages, or they can get delayed. That will definitely affect the price of Bitcoin. If it gets delayed, Bitcoin will probably drop back down, settle back out. Money will come out of Bitcoin. From an institutional standpoint, if they get past to the next stage of approval, then more money will likely flow into Bitcoin and try to front run that. So right now, that's kind of the narrative in Bitcoin driving price action. This is not broad retail yet. This is maybe a little bit of institutional whales. And then of course, the exchanges and market makers kind of manipulating the price here, trying to get ahead of all that, suck people in and get ahead of that move. So, that's kind of what's driving this price action right here, just as like kind of what's driven it the whole way there. So the Binance issue continues to move forward. They recently filed a motion with the judge to stop the SEC from inappropriate conduct, and that was denied without argument. So this trial with Binance is just getting started, and is not going to be as easy as just filing motions to dismiss or stop or put gag orders on anybody. So pretty interesting there what's going on with that situation as that moves forward. So all of that's going to weigh heavily on Bitcoin, crypto, as well as the ETF situation, whether or not the SEC is going to go ahead and greenlight that, move it through, or if they're going to, hold firm and continue to deny. And again, the narrative is, or the thinking is, if the SEC wants to get rid of stablecoin or get rid of cryptocurrencies, altcoins, anything other than Bitcoin, then how do you do that? Because they can't go after all of them individually. So the best way to do it is to go after the exchanges to eliminate people in the United States from having access to those tokens through exchanges. So that's one way to keep people from buying cryptocurrencies and altcoins. And so you go after the exchanges, you stop that, you approve ETFs, and that gives everybody the access to Bitcoin and kind of takes a little bit of attention off of altcoins. So that's if there is a thinking behind the scenes that the SEC is wanting to try to stop just general stablecoins and cryptocurrencies and things like that. So these are the things I'm looking at. Critical time for the markets in terms of whether or not this is a reversal of the rally that we've seen for the last few months, or if this is just a little correction, and then that rally is going to continue on into a new bull market. So right now, I'm not convinced it's a bull market until we rebound from here and clear that 702 level and start moving forward. So right now, bear market rally until proven otherwise. And we are at that point where markets do reverse, turnover on themselves. In the past, that 702, 786 level is where they have rolled over to deeper, lower lows and a longer term multi-year bear market in the past. So those are the things I'm looking at. I'll see you in the next video.